Good afternoon. Welcome to today's webinar about One-Stop Shop and Import One-Stop Shop, the new EU VAT rules. My name is Lê Thuy Dương, and I serve as a Marketing Communications Manager at Global VAT Compliance, known as GVC. I will be your host for today's webinar, which brought together nearly 100 participants from across the world. We are very delighted to have you joining us today. Before jumping into the agenda of the day, I'd like to direct your attention to some housekeeping rules. The presenters will be able to answer a small number of questions coming from the participants. If you have a question, make sure to use the Q&A function. The Q&A button can be visible on the bottom of your Zoom screen, and the example of the icon is right now on the left side of the presentation. If you want to engage or share other kinds of insight with all the panelists, please use the chat function. The chat function is also visible on the bottom of your Zoom screen, and the example of the icon is shown right now on the right side of this slide. Joining us today is Paul Bakker, a Managing Director at Global VAT Compliance. Paul has over 20 years of experience in indirect taxation and procedural tax advisory. Paul leads GVC's consultancy and digital taxation practices, performing both legal and tax analysis of international transactions. Our second speaker is Cliff Mosdal. Cliff is a software engineer at GVC. Cliff has over 30 years of experience in developing softwares, back-end systems, and also security systems for brands within the financial sector. Our session today has placed three main aspirations. First, we're seeking to help you understand the main and the most important changes that happened to the EU VAT system since July 2021. We will tell you more about all the EU VAT schemes to help you understand which one might be the most fit for your business or for your stakeholders. Second, we're aiming to provide very clear and comprehensive analysis of OSS and then IOSS, including many iterations of the schemes to show how they apply based on unique business situations. Third, we would like to present you with some of our automated solutions developed. Those are compliance and software solutions. They are developed to help you perform OSS and IOSS obligations more efficiently. And lastly, we also hope to resolve any unclarities by answering your questions during the Q&A session. So without any further ado, I'd like to hand this session to the first speaker, Paul Bakker.
Thank you very much, Duong. Let's move into the first subject. Very welcome also from me to this webinar. So yeah, let's first start with the changes. What has changed since 1 July? We're now 3 months into the one-stop shop era, and we're almost down to the third deadline for the import scheme. And the first deadline for the OSS returns is this weekend. So yeah, we have some first experiences that we will share with you. But first, to repeat what is actually happened since the 1st of July. Well, first of all, there is a single registration for VAT in all EU member states. That's the one-stop shop. Actually, there are more of them. It's not just one-stop shop, but there is a single registration. And under that registration, you can file a very long VAT return where you report the VAT for all EU countries. And then the VAT is distributed by the country of registration to the member state where the consumer is. Second big change, instead of having a VAT registration threshold on a per country basis, there is one EU-wide threshold for EU companies that applies to these the intra-EU distance sales. So that's the second change. Thirdly, the role of the online marketplace has significantly increased. Previously, sellers on the marketplace were still responsible for the VAT remittance on all their sales to consumers. But in a number of situations, the online marketplace has become the deemed supplier. That means that you first sell to the marketplace, and the marketplace is actually making the sale to the consumer. Then on the import side, before you could buy everything on AliExpress tax-free. That's no longer the case. There is no more low-value consignment relief, and that means that also small parcels are subject to VAT now, and how that is taxed we'll discuss later in the presentation. And of course, dealing with multi-country obligations also means new record-keeping requirements, and we touch upon that. It involves keeping your records for an amount of time, and the invoicing obligation that may or may not exist. So what has changed? Well, the B2C sellers previously were bombarded with VAT registration obligations. Some of our clients in up to 27 countries. So everywhere where they exceeded the so-called distance selling thresholds, they would be liable to VAT registration. That is no longer the case. Another problem in the view of the legislators was that most parcels coming from out of the EU would be valued at a price below 22 euros. So whether the consumer would pay 50 or 100 euros on the package, the sticker would also say, yeah, it's $5. And then there would be no VAT payable, even though the price paid did not justify that. In order to avoid this abuse, the new rules came, and the 22 euro low value relief, that is the last point, was striked out, and now there is no more low value. So the only threshold there still is the 150 euros, and that's the threshold for when customs duties become payable. So that's the main reasons why it changed. So what are the benefits for sellers that we see? Well, of course, a reduction of cross-border VAT compliance costs and overheads, because you don't have to deal with all these VAT registrations anymore, which helps. And VAT registrations are going forward only required in countries where goods are shipped from. So the OSS means that you do not longer have to register in the country where the goods are going once you exceeded the distance selling threshold. But if you store goods in a location, for example, at an Amazon warehouse or your own or a third-party warehouse, wherever you store goods on the ground and you supply them from there you will still need a VAT registration, but only in that situation. And on the side of the imported sales, EU businesses, of course, are on a more equal foot with non-EU sellers who previously were all tax-free shops, but now this is no longer the case. Also for customers, there's some more transparency, and you know at checkout what you're going to pay for a product. You will pay the VAT rate that you know. And for imported goods, there is a more efficient delivery track, because IOSS registered consignment will go speedily through the customs clearance. So to start off, we want to keep it interactive. We want to ask you some poll questions, and the first one is coming up right now. And the question is, and you can answer via the chat box, you will see it in your screen. As of today, has your business benefited from the new EU VAT changes relating to B2C services? And the answers are yes, no, or none of the above. Maybe you don't know yet if it made a change, or you can't really feel the impact yet. We're curious to see what it is. Have you already benefited? I can see, a small majority already feels that they have benefited. So, well, we start off with some good news. So congratulations to those of you who have benefited. The other ones are still getting used to it or haven't seen the result because they maybe haven't filed yet. So moving on to the one-stop shop. And what does the new VAT environment for B2C supplies look like? Well, here is a picture that we created. So at the top, you can see the one-stop shop. But the one-stop shop is actually consisting of 3 different schemes. From left to right, the non-union scheme, which is a scheme that applies to services. So it looks a little bit like the mini one-stop shop or the VAT on e-services system that we had since 2003 for non-EU sellers of electronic services. Well, that scheme has been expanded to other services. I will discuss them later, but non-EU sellers can register for this scheme. Second scheme, and that is the big one-stop shop, that is the one-stop shop for EU sellers, where they can report VAT on services, but also on intra-community distance sales. So the distance sales that previously would be subject to all these thresholds, they can be reported in this scheme, and EU sellers will register for this in their home country if they want, and non-EU sellers can register somewhere and then make use of it, so they have a little choice. So that's the union scheme. And then the third one-stop shop is the import one-stop shop, and that applies to these sales of goods with a consignment value of below 150 euros and that are sold from a location outside the EU into the EU. So those are the three schemes, and then belonging also to the new rules on the IOSS, because everything has to be taxed. It may be the case that the seller is not IOSS registered because it's optional, they don't have to be. Then there is a special arrangement for postal and courier operators who can then collect the VAT from the consumer and then report this VAT and a special VAT return for them on a monthly basis. So only once they collect the VAT, then they report it to the tax authorities. And then the block at the bottom, and that is an overarching phenomenon where the marketplace will act as deemed seller. So where a marketplace is involved in the sale, marketplace like Amazon or eBay, if they are involved, then they will serve as the deemed seller in a few situations, mostly applying to non-EU sellers, but I'll explain about that later. But largely you can say that the non-union scheme applies to services, the union scheme applies to goods and services, the import scheme and the special arrangement, that's only for goods. So that's just to set the stage. And I have right away a poll question about this. Prior to this webinar, were you aware that the new EU VAT system has 4 different schemes? Were you aware? Well, it's very tight. It's around 50, 51, 50. It's an exact draw. No, 51, 48, 53. Well, it's about 50-50. About 50-50. Here are the votes. It's very small majority was aware that there were 3 different schemes, and yeah, you wouldn't say but it's also an EU thing. We promise you a one-stop shop, and then we give you 3. Why not? So let's start with the first block, the non-union scheme. And as I said, it's a familiar phenomenon. It's for services provider, and the only difference with the prior to 1 July situation is that before it was only telecommunication, broadcasting and electronic services that were subject to these rules, and now it's wider. So the US company providing services to EU consumers can, in its country of choice, and Ireland is an obvious choice, being the closest EU countries to the US, and also from a language perspective, it can be a logic choice. If you register in Ireland under the OSS non-union scheme, then in that country you can file the OSS return and report VAT for all service supplies to consumers throughout the EU, and then on the invoices charge local VAT of their countries to them. The VAT is then paid to the revenue commissioners in Ireland, and the Ireland revenue commissioners will pay the VAT then onwards to the tax office in the country where the consumer is based. So that is the non-union scheme, and it's basically a continuation of the previous mini one-stop shop and VAT on e-services that has applied already for almost 18 years, and which has now been expanded with a few services. So this is the original scope, the TBE services, for example, downloads, software, SaaS products, ebooks, streaming, all well known, but also telecommunication, so VoIP type of subscription via the internet, and broadcasting services. That's all subject to the non-union scheme in the past, but it has also expanded to some other areas, and that you can see here. And basically the rules, and this also applies, by the way, to EU sellers of services. If you supply services that are subject to VAT in the country of the consumer, then it is subject to VAT, and it can be paid via the non-union scheme OSS or via the union scheme OSS if you're based in the EU. So it can be, for example, the letting of accommodation, scientific and so events that are taxable in the country where they take place, transportation services. If you hire a painter, if a painter is very skilled at making houses white, well, his service will be very much appreciated in Greece and Spain during the summer. And then instead of registering in Spain and Greece for these painting services, he can report it if he lives in another country in an OSS return as well. So it's open to all businesses going forward. So that is a non-union scheme. Moving onward into the union scheme, where the most noteworthy change is that for intra-EU distance sales. Now, let's go back 3 months in time. Then we were still in the old system, and if we would have a sale by a Dutch seller to a Finnish consumer, whereby the buyer is not registered for tax and the transport is handled by the seller. It does not involve any margin scheme type of goods or new means of transport. And of course, you're taxed in your local jurisdiction. Then what would happen? The Dutch seller, up to reaching the threshold of 35,000 euros, would only be dealing with the Netherlands tax authority and pay them the VAT on the sale. So here comes the money. And so up until reaching the threshold for sales to Finland, they would settle everything with the Dutch tax authorities. So there was no requirement to deal with the VAT rate of another country. And you could have like 10 countries. If you would sell to 10 countries for 20,000 euros each, then you would have 200,000 euros in revenue to other countries, but you would still be charging them all Netherlands VAT. And then once you exceed the threshold, so if we go to over 35K, at that moment, we don't no longer deal with the Dutch tax authorities, but the Finnish tax authorities. There we have to register, get a VAT registration, and then charge VAT to the Finnish VAT to the consumer and pay the VAT to the Finnish tax authority. Well, if you were lucky, then you had to do this with 26 other jurisdictions outside of your country. And of course, that's a lot of work, and it's good for a company like ours, but it's not nice for doing business in so many countries. So this has changed, and now we move to the new situation. Question is it simpler? So as I explained, you could have a good amount of revenue in many countries and still only deal with your own tax authority and only have in your checkout system set up the VAT rate of your own country. Because you first had to exceed the distance selling threshold, and then you would have to look after more VAT rate and check if in the meantime the Italian or Bulgarian tax authorities have not increased or reduced their VAT rate. You have to keep track of that. In the new situation, the distance sales are always subject to VAT at the rate of the country of the customer once the distance selling threshold is exceeded. But what is this distance selling threshold? It is only 10,000 euros for all EU countries. So previously we had to send more than 35K to Finland to even consider dealing with the Finnish tax authorities. Well, if the Dutch supplier going forward sells for 5,000 euro to Belgium and 6,000 euros to Germany, then they sell for 11K to other countries. And that means that every sale they make throughout the EU has to be taxed with the country of destination VAT. And so, yeah, this is a very enthusiastic application of the VAT rate. Now, how does that work? Once we cross the 10K bar, and let's assume that any serious business will quickly exceed the threshold, then the Dutch supplier has to get registered for OSS with the Dutch tax authorities and charge the VAT of Finland. So we register with the Dutch tax authorities. where we already have the regular VAT registration that we always had, then activate the OSS portal, and then in the OSS portal, we open up a lot of lines. One of them will be Finland, and then for Finland, the VAT will be paid onward to the Finnish tax authorities. So that is in a nutshell how the union scheme one-stop shop works going forward. So very low threshold. And the question is it simplified? It's simplified in the sense that you don't need many VAT registration, but it is complicated because already at a very low international revenue, you have to keep track of many VAT rates. If you have goods subject to the reduced VAT rate and the standard VAT rate, you may be dealing with up to 50 lines in your VAT return, which is quite a lot to handle. Fortunately, there are some companies that came up with some tools that can help you to reduce this burden, but it's not for everyone. It's really a simplification. So who can use the union scheme? Well, that's of course, first of all, taxable persons who are established in the EU, and they can use it for these services that we've seen. So the digital service and the other services taxable in the country of the consumer, and for the intra-community distance sales. But this scheme is also open for taxable persons who are not established in the EU, but they can only use this scheme for the intra-community distance sales. So for example, if they are selling from a warehouse somewhere in the EU to consumers, then, and if they do that directly, so not without the interference of an online marketplace, then they can use the union scheme OSS just as well. But they cannot use it for their services. For services, they need to apply for the union scheme OSS. So if you have a mixture as a non-EU seller of goods and services, then the one-stop shop may mean that you have two. And of course, once you start exporting goods from a location outside the EU, you may have the IOSS again. So it's really thinkable that you have to register for all the three OSS that I described in the beginning. Last point, who can use the union scheme, that's online marketplaces. So for online marketplaces where the seller, so it's good sales within the EU, where the seller is established outside the EU, then the marketplace is the deemed seller, and they can report the distance sales in their one-stop shop return. But also they can report domestic sales there. So that's an exception to the rule. Normally you only look at cross-border sales, but marketplaces can also sell. So for example, a Chinese seller on Amazon Germany, then Amazon is the deemed seller, but they can report in the one-stop shop sales from Germany to France, but all sales to German consumers. So that's an exception. Normally it's only cross-border, but for online marketplaces there is this exception. So the last of the three, the import one-stop shop, also a little historic overview. How did it used to be? Well, imagine we had a UK seller between 1 January 2021 and 30 June 2021. So then the first half year after Brexit, what did it look like? Well, if they sold to a Finnish consumer below 22 euros, there would be no impact. If they sold between 22 euros and 150 to a Polish buyer, then there would be VAT theoretically, and no customs duties, but VAT would be collected from the buyer. And for sales over 150, the EU buyer would also be the importer of record, and customs duties would be collected from the EU buyer, but also the VAT. So that was the three scenarios that we could see for incoming import distance sales. Now, what happened? As of 1 July, the first two options are no longer valid. So only the one at the bottom, that's the one that still is. So above 150, as such, there is no change, but the first two scenarios have been replaced. Now, what kind of scenarios can we identify now? Imagine we are a merchant that wants to sell into the EU from the US or from China, and wants to avoid that the buyer has to pay VAT on the products that are sent. Then, well, for the situation below 150, and the top one is from the US, then the merchant can register for IOSS. And as a US seller, they have to register via an intermediary. And it's looks a little bit like a fiscal representative, but it's a little further going phenomenon, but we'll talk about that later. And then at the point of sale, charge local VAT to, in this case, the Polish buyer. So that's basically how it works when you drop ship from outside the EU to the EU consumer. If you apply for OSS, IOSS, then you can charge a VAT and no VAT is levied at import. Above 150, then yeah, it's basically the same as today. If you want to avoid that the buyer has a bad customer experience and has to go to the mail office to pay the VAT and the duties, then in fact the only way to avoid that is to get for the Spanish consumer, get a Spanish VAT registration and import as the merchant, and then charge on the VAT to the buyer. So that is basically the options that that apply in that case. And yeah, and now that we've started and we've seen some scenarios, let's look at the third poll question. Do you already have a good understanding of the implications that IOSS has on businesses selling into the EU? And the answers are yes or no, to keep it simple. Well, and I'm not sure if it came from what I just told or you already had the prior knowledge, but a big majority seems to be aware of the impact of IOSS. So that is very good good news. It's not the case yet that the majority of packages coming into the EU is already under IOSS. I believe it's still a minority. So not even 50% of the online purchase from outside the EU are currently covered by IOSS. But yeah, we just started, so the only way is up probably. So what, yeah, so to elaborate more on the import scenario. So we've just seen two situations. So below 150 euro consignments, we can apply IOSS. Above that, we need a registration in the country of the consumer. Well, if you want to have a DDP import model, so you're based outside the EU, but you want to have an easier life for you and your customers, then one possible solution is that you import the goods centrally, and then from a location in the EU, you ship the goods under the union scheme. So as I just explained, non-EU sellers can also apply the union scheme if they ship from the EU. So that may be a way to not to deal with, if you want to give the customers the experience that they get everything tax paid, then the option would be, for example, to import in the Netherlands and then ship it from the Netherlands. So the non-EU seller in the UK would ship everything to the Netherlands, and then from the Netherlands it's shipped to the consumers. Advantage is that if you ship it in bulk, you can make use of import VAT deferment, settle the customs duties centrally, and then onward sell as a sale within the EU, and then apply this union scheme whereby the VAT is paid to the Dutch tax authority, who then distributes to the Finnish, the Polish, and the Spanish tax authorities. The marketplace, also important to note. So if there is a marketplace involved in imported goods below 150 euros, then this deemed marketplace sale applies. And that yeah, that means that an online marketplace will remit the VAT to the tax authorities in which country they are registered. So the US seller sells on a marketplace, a French consumer buys it on the marketplace. Well, the marketplace will display the VAT at checkout and collect the VAT, and then the goods are shipped to the consumer, are imported with use of the IOSS number provided to the marketplace, and then the VAT collected from the consumer will be paid by the marketplace to the tax authorities, who will then finally bring it to the tax authorities of the consumer. And you can see with the dotted lines, so that the sale, so the direct sale to the consumer, is broken up in a deemed B2B supply to the marketplace, and then a deemed B2C sale to the consumer. Question 4, I mentioned it. Do you understand already when a business needs an EU-based intermediary? Answer is yes or no. See, the lines are moving, but again, a vast majority answers the question with yes, as I look at it. Yeah, vast majority says yes. 65%, so 2/3 of you is aware when you need an intermediary. An intermediary you need when you are based outside the EU. So in this example, we have a Chinese supplier selling goods below 150 euros to the EU, for example, in Finland. So once they appoint an intermediary, they get registered in the EU in a country of choice, but it has to be the country where the intermediary is based, and then ship the goods with their IOSS number from China to Finland. If the IOSS number is available at customs clearance, then there is an exemption of import VAT. Customs duties don't apply because they only apply on consignments over 150 euros. So they go straight to the consumer, and the consumer settles the VAT with the supplier at the point of sale, and then the VAT is remitted via the intermediary to the tax authorities. The intermediary is the party who is liable for paying the taxes. So it's not a joint liability like a fiscal representative often has, but it's really a full liability. So the first party to go to will be the intermediary if the tax office wants to collect VAT. And yeah, as I mentioned, we're just about to finalize the third round of IOSS filing, because it's a monthly filing that happens. Some points to note that we the invoicing obligations. In most cases, for B2C sales, there is no longer an invoicing obligation, but the country where you are registered may require you to do so. And if you are not registered under the OSS rules, then the rules in the country of destination apply. So likely if you waive the IOSS, then you will look at full invoicing obligations. Also, when you are a seller, a non-EU seller on a marketplace, and marketplace operates as deemed seller, then you have an invoice obligation for the deemed B2B sale to the marketplace. So that's something to take into account. But I expect that most marketplaces will initiate self-billing in that situation. So IOSS, how does it work? First of all, you have to get registered for it, and then you get a unique IOSS number. And that number is valid in all countries. So if you register for IOSS in Belgium, then it's not the case that you have to import everything in Belgium. You can also use it in Romania, Italy, wherever you want. The VAT has to be charged at the point of sale. So at checkout, you get the IOSS number, which has to be present at customs. Every month you have to declare and pay the VAT in your IOSS return. And lastly, you have to keep for 10 years the records with respect to the sales that you made. Then I would like to note the special arrangement for low value imported goods. So that's in the situation that a seller decides not to register for IOSS. So at customs, there's no IOSS number, but the value is still below 150. Then the Postal and Courier Organization takes care of the import and collects the VAT from the EU customer. And this VAT collected can then be reported in a monthly declaration. So that's what happens. Seems like an attractive deal, but it may not be for the consumer. So here we have some examples. So before the 1st of July, if you had a product of $20, then there would be no customs clearance fee because it was not taxed. There was no VAT, so you would buy it generally on the marketplace for $20, and then it would come to you for $20, and that's it. Often, of course, much cheaper, but there would be no additional cost. Well, after 1 July, let's see what happens with IOSS. If we sell something for $20, then there will be no customs clearance fee because the customs is exempt. There is a VAT charge. So let's say it's the Netherlands, 21%. So we have $4.20 as VAT. So the total landed cost will be $24.20. Now look what happens if the postal or courier organization have to do their magic. They look, okay, here we have a parcel, it's $20. We need to customs clear it. We charge the buyer $15 for it. On the top of the two amounts, we have to charge the VAT, and now all of a sudden the product has become $32. So it may well be that this is the last purchase from the client. So that is something to take into account. It reduces the administrative burden, but you're not longer a very sound solution for your customer. So now you may be looking at filing your first OSS return, or you have done it this week. Question is, how confident do you feel about it to file the first return, or do you feel about the return that you maybe have already filed? Are you very confident? Are you confident? So, not confident, or I don't know how to file it at all. Well, also here, I think many people are pretty confident. It's also a bit scattered area. Yeah, this makes so there's some work to do here. Let me finish up with some case studies just to see, okay, how do the rules work, just to repeat what we have just discussed. So let's say we have a distance sale from the Netherlands, an EU and a non-EU seller, and we apply for OSS. How does this work? So we're now after 1 July, there is no marketplace involved. Sales online to another country from a warehouse in the Netherlands. Well, both the Dutch seller under OSS and the non-EU seller, who has to be registered in the Netherlands because he has goods in a Dutch warehouse, he can also register for OSS Union Scheme, and both will charge French VAT in their Netherlands OSS Union Scheme, and the Dutch tax authorities will pay the VAT to the French tax authorities. So straightforward scenario, that is how it works. But let's think that the consumer is not in France, but in the Netherlands. What happens now? In that situation, both sellers have to report it in their Netherlands VAT return. So no OSS applies here. So it's just the Dutch VAT return, no OSS. And the consumer will receive the goods with Dutch VAT, and it's reported to the Dutch tax authorities, and that's where it stays. So the OSS in principle only applies with cross-border sales. Now add some complication. We have an EU seller and a non-EU seller selling from a China warehouse. So good old distance selling or drop shipping. Well, what can we have here? Of course, both can decide to register for the OSS import scheme, or IOSS. So if they have the IOSS number, they will charge at the point of sale the French VAT, and the goods go from China to France and are imported. This only can happen for goods below 150 euros. And both can register under the IOSS, but of course the Chinese seller would be liable to appointing an intermediary who's then responsible for paying the VAT, and the VAT will end up at the tax authorities. If they do not do that, so they decide not to register for IOSS, then you can see at the bottom that the postal or courier operator will collect the VAT from the French consumer and pay it to the tax authorities. So these are the three scenarios that can apply. So direct OSS, or OSS by intermediary, or the special arrangement applies. And this is all without a marketplace. If we add a marketplace in the mix, so we go back to the original example with the sale from a Netherlands warehouse to France to a consumer with an online marketplace, then online marketplace sales for the Dutch seller, an EU-based seller, He will just like today take care of the supply in his own VAT return. So the either the Dutch VAT return or the OSS return as it regards a sale to France. For the non-EU seller, the deemed seller is the OMP. So the foreign seller will first make a deemed sale to the OMP at 0% VAT, and then the OMP will take care of the B2C sale to France and pay the VAT to the tax authorities where they are registered for the OSS, and then that tax authority will pay the VAT to the French tax authorities. So that is, those are all the flavors that we see in e-commerce. Just touching upon the changes that we have as of 1 July. And then before I hand over to some solutions that we have come up with. So before 1 July, we needed a VAT registration in all countries where goods were fulfilled from to consumers. Well, that is still the case. Before, we need to have VAT registration in countries where we had filed an option request or where we had exceeding the distance selling threshold. Well, that does no longer apply. We can register in other countries, but only if we want to. The distance selling threshold applied for each country individual and ranged from 35k to 100k a year. Going forward, we only have one distance selling threshold for all of the EU. Foreign VAT had to be reported in foreign VAT returns. Now we have the one-stop shop where you can report it in the country where you are registered. And then lastly, some things that remain the same. So local B2C sales are reported in the local VAT return. I mentioned that example, that is still the case. B2B sales are taxed as before. So you make intra-community supplies from one country to another. If the customer is a business, then no changes in the rules. OSS does not play a role in that. And also transfer. So for example, in the Amazon ecosystem, you can see transfer from one warehouse to another. Those still have to be reported in the VAT return. So Amazon sellers, for example, have to be registered in each country where they make use of Amazon multi-country fulfillment. So for that, it's not a simplification, and you still need all these VAT registrations. Now to finish off with the content, what have we seen so far? Well, we have seen that the OSS is, if you have to compare it to someone, it looks like a toll road where they first built very nice and shiny toll ports where you have to make the payment, and then they decided, well, we will make the road later, and that is currently what's happening. So it's a very manual process to submit it. That's the first experience. In the German OSS registration process, there seems to be a flaw, which makes it likely that all registrations done previously and returns that are filed currently have to be corrected soon. There was a notification about that today, but the Germans indicated already early that they were not ready. In Poland, we just encountered that normally Polish filings are in zloty, but of course they don't want to act as bankers. So the OSS return in Poland has to be filed in euro, which is of course a little bit unexpected. Italy has a rule that they do not allow you to report inbound distance sales. So an Italian seller selling from an Amazon warehouse in Germany to consumers in Italy, then you would expect that to be in the OSS. They do not allow it unless you set yourself up as a non-resident, which is something different than a foreign ship from location. But this may also lead to reconciliation because you cannot match the outbound flow from Germany to Italy. So that's also a point of attention. Retrospective OSS registration is not possible, so you have to sometimes take a practical approach to the period that you have not been registered, because the alternative is that for the past few months you have to register in all the EU countries where you had sales. So that is something to talk about and to consult a tax advisor on whether you need to do, and we are more than happy to help you if you overcome such issues. And IOSS, retrospectively, we got the question, we need to get IOSS registered from 1 July. Well, of course, that's not possible, and it's also pointless because you can only apply IOSS if the IOSS number was available at import. So it's only useful going forward. Moving on to some of the solutions we have developed. Yeah, what can we offer to help you? We can imagine that the filing in OSS they happen in in your own country. So you handle your VAT returns locally, or your advisor does. But still, the calculation of the OSS VAT, that can be quite a big job. So we may be able to help you. We can help you with calculations, with preparations, and also potentially with filings. But yeah, that can be either registration or the calculation only. We have quite a few clients that have asked us, can you help us with creating an OSS report to be filed out of, for example, the Amazon warehouse. So that's something that we can definitely help you with. And we also have a calculation service. It's a one-time offer in this webinar that for Q4 we create a calculation for you, and so you can reconcile that what we do works with, matches with what you have done yourself. So this is something that we can help you with for the Q4 report. So as I explain on the next slide, how we can help you with that. So you can register on our website, make the payment for the service, and then provide the data via our software, and then within 2 working days you will receive the results, and that you can include in the numbers. And if you like that service, of course, you can sign up for it for the future as well. I can definitely recommend it because it's a lot of work in a lot of countries. But yeah, we also have developed some other tools, and for that I give over now to Cliff, who will tell something about our new software tool called Parlay, which is of course French, and it's named that way because Parlay can talk to a lot of online e-commerce platforms. So with that, I give over to Cliff for his demonstration.
Thank you very much, Paul. Welcome everybody. My name's Cliff. I'm a software developer at GVC. I've been asked to come to talk to you about Parlay, our automated VAT return preparation software. As Paul already said, Parlay is French. We're a multinational company, so that appealed to us. Parlay, French for talking, which is what we do to many different websites that are interested in OSS. Parlay is a technology developed by GVC that automates the process of VAT return preparation, helping businesses comply with the OSS and IOSS obligations more accurately and timely. We designed it so it can communicate with more than 40 different web shop platforms, which makes it very attractive, and we think we've covered just about all of the marketplaces. Let's talk a little bit about how it works. Sales data is read automatically into our VAT compliance platform, My Tax Flow. It knows exactly when your next VAT filings are due because it's integrated with our software. Each time your IOSS filing term is near, Parlay automatically reads sales data between your e-commerce platform web shop and its compliance and our compliance platform, My Tax Flow. As I mentioned before, it communicates with more than 42 different e-commerce platforms. It also does automated VAT return preparation. Based on the sales data, it's synchronized into the compliance platform. The IOSS return declaration is produced automatically. We have a 2-way quality control. We check your VAT return for data accuracy and completeness in 2 ways. First, our software checks the data, then our team performs the final quality control prior to your approval, and then the VAT is subject to the tax authorities. Approving the monthly or quarterly VAT return and monitoring its progress. So we do that together with you. We receive notifications whenever there's any payments to be made, filings to approve, deadlines to be met, or VAT tips to consider. That's what we're going to be doing for you. Parlay is fully integrated with our compliance software. It's cloud-based, which means it's very, very secure. And it's got a number of very interesting benefits. It's automated obligations, processes, uploads your data, monitors the progress and approves the returns. An automated creation of your VAT return thanks to real-time synchronization of your sales data, real-time overview on all your tax processes and documents such as opened and submitted VAT returns, including a full audit trail. It's cloud-based, as I mentioned before, and ensures full data security. VAT calendar and cockpit containing all your upcoming VAT returns and deadlines. That's a quick overview. I hope you found it interesting. If you're interested, contact us and we'll get back to you and we can see how we can integrate your web shop with our software to enable OSS compliance. Thank you very much.
Thank you very much, Paul and Cliff, for providing us with the amount of insights. Before we let you off completely, we'd like to direct some questions coming from the participants. Paul, there's a question coming from Simin, who's asking the following. If we ship our products from GCC, Gulf Cooperation Council, to EU, to individual through third-party delivery services, do we need to register for VAT?
Yeah, that's a good question. Yeah, the answer, do you need to be registered? The answer is no. It is an optional regime. The goods will be subject to VAT, whether you register for VAT or, for example, whether you set up for IOSS. So if you set up for IOSS, then you can charge the VAT at the point of sale and have the goods go directly to the consumer. If they're below 150, if they are not, then you can. So if you're not set up, then yeah, the VAT will be collected by the postal courier service under the special arrangement. So you don't have to be registered, but yeah, the customer experience will be, of course, far less beneficial for future business, I would presume. So it's all optional, an optional system, but yeah, for the clients it may work more customer friendly. I hope that answered the question.
Thank you, Paul. Here's the next question coming from Anthony. I was informed that UK companies could not use the non-union scheme. Is this correct?
That UK companies cannot use the non-union scheme. No, that's not correct. UK companies are based outside of the EU, so a UK company selling digital services into or selling services into the EU will be required to apply the OSS non-union scheme. That's the only way to register. But it's only for them. It's only for services that they can report there. So it's not for distance sales of goods. Only for service supplies from the UK to EU consumers. They can use the non-union scheme.
Thank you, Paul. And here's the next question coming from Christopher. Is this right that you can opt out from the £10,000 distance sales threshold and charge destination country VAT rate on every sale and report these through Union OSS?
Yes, once you register for OSS, then you have to use it. So you can wait until you reach the 10K mark, but yeah, you don't have to wait. As many companies have done, they've registered already prior to 1 July. So whenever you're ready, you can register for OSS. You don't have to wait for the threshold, and it's not a threshold per country. So before you had to opt in with the country of destination, but now it's the case that once you register for OSS, it's mandatory to use it. So everything is optional, but once you register, you have to report all the VAT on your cross-border B2C sales in the OSS. So you cannot do cherry picking. That you think, well, I still have a registration in Italy and Spain live, so I report the local VAT or the VAT there. for sales, distance sales into these countries. That's not allowed. Once you register for OSS, you have to use it. And the opting in happens by registering for OSS, regardless of whether you've passed the threshold or not.
Here's the next question coming from Oliver. Oliver is asking, does the one distance selling threshold apply for a non-EU company fulfilling from within the EU? For example, if fulfilling from Germany, could they register for VAT there and then fulfill to the EU under this return only so as long as sales to the other EU countries are less than 10,000K?
Yes, so that applies to all. So if a non-EU company gets registered in Germany, sells from a warehouse, well, and then if business is very slow, because I would expect when you're an international seller that take 10K would not take you long, but yeah, theoretically you get then for the first 10K charge German VAT, but then you would have to switch. But yeah, for the sake of simplicity, I would say register immediately for OSS, so that you don't have to adapt after a few weeks in, or a few days, maybe even in trade, because that's likely going to happen. It's yeah, it's a very small threshold to reckon with, especially when you're a non-EU seller going into the EU. Then yeah, the OSS setup seems like a sound solution. But do not forget, when you're a non-EU seller selling goods via platform, then you may not deal with OSS at all, because the marketplace may be the deemed sellers. It's only for your direct sales into the to the customers.
Thank you, Paul. Here's the next question from an anonymous participant. If you have an EU seller selling to EU residents, but being fulfilled by a company based in UK, can the EU business seller register for IOSS to provide fulfillment company within the UK with the IOSS number, similar to a marketplace transaction? Do you want me to repeat the question?
Yeah, there's a lot of information in the question.
So if you have an EU seller selling to EU residents, but being fulfilled by a company within the UK,
Yeah.
can that EU business register for IOSS to provide the fulfillment company in the UK with the IOSS number?
Yes, the IOSS number is not limited to a EU or non-EU. So also EU sellers can make use of an of IOSS. So if they fulfill from a location outside of the EU, they can still apply the IOSS and apply a number. And the advantage is that they do not have to appoint an intermediary, but it's open to everyone. So that is definitely not a problem. Also, the EU can apply IOSS.
Thank you. We are receiving a lot of questions, but we are not able to answer all of them. So we have time for only one more question. This is a question from Annabella. If the product is over 150 euros and exceeds 10,000 euros of sales per annum, will the company have to register for VAT in the EU country that exceeds the 10,000 sales?
Well, there's an important thing to note, that the 10,000 euro threshold applies to intra-EU distance sales. So it plays no role with IOSS, and for IOSS, the 150 euro threshold is. So it's a very good question. Just to clarify that as we come to the end of the presentation. So the 150 euro is the threshold for consignments that are sold from outside the EU to the EU, and that you can report in the IOSS. There is no 10,000 euro threshold for that. So from the first sale that you make, they are subject to VAT, and you can register for IOSS. And if you don't, then VAT has to be collected. So there's no threshold there. If it's an intra-community distance sale, so a sale, for example, from Germany to France, then indeed there is the 10,000 euro threshold, but it's a threshold for all countries. So if I exceed the threshold from Germany into Austria, then at that moment that I sell for more than 10,000 euros to Austria, I've exceeded for all EU countries. So also sales to France will be deemed to have exceeded this threshold, because it's only one. So there's no longer a threshold per country. So the 150 euro only applies for imported consignments, and the 10,000 is only for shipments from one EU country to another. But it applies to all of the EU, so not an individual country. That's important to note.
Thank you very much, Paul. Dear participants, as much as we'd like to answer all of your questions, unfortunately, we are limited by time. However, we will come back to some of those unanswered questions later to you via email. As you could have seen from this presentation and our questions, is that OSS and IOSS schemes aim to simplify compliance obligations for online sellers, but it depends on individual business situation. And the individual EU tax authorities still yet need to provide more guidance on how they will accept the OSS and IOSS reports. So with those thoughts in mind, on behalf of GVC, I'd like to thank you all for participating and joining us today. We welcome you to explore more resources about OSS and IOSS through our website, where you can download the OSS and IOSS guides for free. You can also access a free assessment tool to see which scheme applies to you. And you can also book one-on-one consultations with one of the OSS, IOSS experts. Thank you very much for joining us today, and we hope to see you in the near future with other events at GVC. Thank you.
Thank you very much. Bye-bye.
Bye.
Bye.